Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com, and welcome to today's morning call. First thing I wanted to say is just all the families out there in Europe and especially in Paris, our hearts at T3 go out to you. The way this impacts everyone in the region, I'm sure, is not easy. And as a survivor of 9/11 and being in the chaos of New York City, I could understand and relate. So just be safe, and hopefully, things will settle out, which it looks like they are. As far as taking it to the markets, which we have to do, we look at market responses to try and figure out how it responds to it. So anyway, Europe started lower and then basically went green. So you don't see any big impact there as of yet. Kind of the buying the markets, and in Asia it was a little bit softer, but you still had the Shanghai up almost 0.75%, and nothing else really took it so hard. So at this point, markets are containing these type of events as far as the action based on that. But the action of last week was very weak. We had our first shot across the bow. We had our first break of upper areas and accelerated trends. It happened pretty fast. We tried to be on top of it for you. Let's just take a quick look at the HEDJ. Same thing here. We talk about accelerated trends, and we talked about if we were to break the 8-day moving average, you could see a little bit of a move lower. And so far, this took it pretty much in stride. From the double bottom lows here all the way up to where we peaked out. You're seeing some support come in, and for what happened with the chaos of Friday, for this not to be lower, I guess it's somewhat constructive. I would write down 59.74. That's right here. That is your pivot to watch for the week. If it starts to break below that and head down into this area, you could see a bit of a headwind coming out of Europe. But right now, it's taking mostly everything in stride. If you look at the SPX, we talk about trends and we talk about how to navigate. And there were a lot of people out there that tried to short this move and got blown out of the water because they started too early. If you would have just waited until the accelerated trend broke right here and the 8-day for the first time was lost, boom, that was your entry. And if you were looking to get rid of your swing longs, this was the first time you actually had your the spot that broke, which was right around this 2090. And if you didn't do it here, you had a little bit of a bounce up that failed on Wednesday. That was your spot. And then you had downside follow through Thursday, and then on Friday even more. So the hard thing about today is on Friday night, the spiders were down $1.50, and overnight, I think the SPX futures were as low as 1998. So that means basically it came all the way down to at least this spot overnight. So you don't know if it's going to revisit that because futures are up a little bit. So I would be a little careful, in the first hour to figure out what the market wants to do. You have a new pivot to trade against, which is 2022. Write that down. Okay, if they try and sell off the market in the first 15 minutes and they can't go through this, it could bounce. And really, you have resistance here at what's that, 2044. And then really big resistance now curling down around 2060. So, today I'm going to be a little bit patient because I too, reduced risk last week. When the accelerated trend broke, tried to test a few things on Thursday and Friday. It didn't work. I was, I don't want to wish down markets, but I was hoping we'd get, 10, 15, 20 handles to the downside because the oscillators were minus 50. So that would have been an easier market to try and buy. So here, flattish, it's going to be a little choppy before the market wants to make up its mind on whether it's going to bounce first to work that oscillator off or, continue and retest where it was overnight. So, with those unknowns, I would say just take it a little easier, and we'll look for some signs across the sectors. And one thing that showed us that we can get downside follow through on Friday was those chosen names that we went over in the Thursday recap. If you look, I showed you spots saying if they were to break these areas, some more momentum will probably be leaving tech, and it'll probably pressure the markets as we're losing leadership. If you look at the Qs, you'll see that the Qs broke below this small little accelerated trend in the 8-day right here. So that was your spot. When the Qs broke this little area, get out of Dodge, maybe even get short. And then, boom, just filled this gap which lost the 8 and the 21-day moving average. So at this point, maybe it tries to bounce. I would write this down for the Qs, which is 109.78. Okay, pretty big move lower, in a very short period of time. I think the tech was down 4.5% last week. But, next really big support doesn't come all the way down to here. It would have been nice if we had a big down open to buy into this, but we don't. So now you have to figure it out because it's kind of in this void, and we'll see if it wants to try and bounce or not. Before I get into the loss of leadership, we talked about how Apple was the first sign of it, which was, I think, over a week ago on Tuesday. You had that report that they're ordering less parts, 10% lower, et cetera, and you had that big gap down in Apple that basically said, okay, this stock is in the penalty box now unless it fills it very quickly, and it didn't even really try. Here was your, spot. There was no reason to be in it. If you remember, we had a nice little trade long right there. We had a trade after earnings that was good. Sold into strength, which, I'm not saying it was lucky, but we do take trades after a big move. And then, the gap down happened and kind of looked as if it was going to try and put a 3-day pivot in and then broke lower. And I think even with the futures up this morning, it's actually down. So, this stock is providing leadership to the downside, not to the upside. So what do we have now? You have yesterday's low, or Friday's low, 212.27. So it's below every moving average. It's broken. It is oversold, so maybe we get some kind of red dog reversal here where it trades back above it. But if it doesn't trade back above 12.22 or 12.27, you do not need to be long this. And then, we'll see what happens moving forward, either today or this week, if it were to come in and retest this 107.50 area with a small spot around 110. So this, gave you a signal that the accelerated trend that broke, could go deeper to the downside because of the loss of leadership, or in Apple, which hasn't really been a leader this year, but I'm just saying in general, when that goes lower, it's hard for anything else to rally. Look at the last time it had a hole right there. It came in, broke support, and gave a few trades here and there, but wound up going lower. So so Apple was in the beginning of the week, and then what happened in the latter part of the week, we had a few good trades, with just say I'll start with Facebook because that was a focus. But then on Thursday I was like, what? If you look here in Facebook, okay, you had your first negative day, so to speak, on Wednesday, and if the market's gonna head lower, you're going to have this break. I showed this, and it actually was Thursday. I'm sorry. I'm like, this looked really good, near highs, and then the market took a correction when it lost the leadership of Facebook, Amazon, Google, which I'll get into in a second, and then boom. So I showed this chart saying, better be careful if this were to break 107-ish, or the 8-day right here, get out of your long, and maybe even get short. And then you had that. So now the question is, is that it? Was that your correction in Facebook or not? No one truly knows right now except for this accelerated trend broke. You now have 103.83 as your pivot. It's only up 30 cents this morning, so it's not really bouncing with any kind of conviction. So, it might even be, get shorted, trades through this, comes in, take your trade, and if it tries to hold the 21-day here and comes back and gives you another red dog reversal, that could be a decent trade. But I would wait to see what happens here. Some guys might be short overnight because this was your first break, so they might come after it. But if it doesn't break below this, we'll see if it holds. If it breaks and accelerates, your next real level below here comes a little bit closer to this 101. And who knows, maybe we get a trade like this. But I'm just saying this was a good spot on Friday. We talked about also what happens if Amazon loses the 8-day. It could break. And it's been in this accelerated trend since earnings with lots of trades along the way. Now some momentum is lost. Okay, so this too could see a move to the 21-day. So if you like to be short these things and you were shorting it the whole way up, you finally got at least a reason to. So question is today, with the futures trying to bounce, does it show relative weakness, trade below this spot, which is 640, and give you some downside follow through to this 620 area? So that's what I would look for in Amazon. Google was actually a little weaker than Amazon. Google, already on the Wednesday closed below a prior low, which didn't happen often, and almost lost the 8-day right there. And then boom, this little accelerated trend broke, and the 21-day is already right here. So see what happens if it starts up $2, goes red, and comes into here, and then see if it holds it. It's been above the 21-day since, pretty for a long time already. So this might be a good spot to test it long if it wants to hold it. But, again, when markets start to correct, if they do come after the leaders last, sometimes it's fast and vicious. So you don't want to just blindly buy into it because you don't know how deep it's going to go. So either you wait for it to put in a 30-minute low or a 60-minute low to trade against, or make sure you have these levels in front of you. And things do change fast. Netflix looked awesome. We were all trying to buy it at 114, 115, and then it reversed that day. It hurt that day to get out of it, which I did because I was long Netflix, tried to buy more at 115 when the market looked like it was going to hold in there. It reversed. Other things reversed. I think I got stopped out around 112. And much better to get stopped out at 112 than hold your nose and go underwater and suck in this entire day down to 103. That's $9 lower. Okay, coming into here, this looked pretty good, right? It looked like you had a nice little bull flag. You had a potential break of this resistance area if the market was going to be strong, and then this happened. Boom. Outside day, get out of it. Momentum probably lost. Don't get stubborn, and then you had downside follow through. So, you could test things, but if they don't, show the direction that you want, you can get out. Some guys might have even got short on that, and if you did, you got paid on Friday. So now at this point, Friday's low is 103.27. It's already below the 8 and 21 day. This is a big support going sideways. I guess here's I think this is the 50-day. So maybe it comes into here and tries to bounce, but at this point it's in a big channel, not very compelling, nothing to really grow on except for if you got out of your longs and you got short, we'll see if you get paid into here. It's only up like a quarter. Usually if Netflix is going to bounce hard, it's going to be up more than a quarter pre-market with the spiders up 70 cents. So just I'd be a bit careful there. I showed you also Facebook. Some guys were looking at LinkedIn. LinkedIn has acted better since earnings, and this too, boom, it changed. When you play momentum stocks, when they lose the 8-day moving average, you get out and you stop looking for momentum, and then maybe even get short. LinkedIn, which was following a nice strong trend, broke. Especially, not everything, things aren't going to hold up when the market breaks, and this broke right here. So with that being said, does it have to get to the 21-day? Will it test the gap? Maybe. So what you do know is this is Friday's low. It's up probably a little bit. If it goes red and trades below it, maybe you get a continuation short. But hopefully if you were in this long, this was your stop out because it broke below the 8-day moving average, which it's been riding since October. So the momentum trend changed. So you move on. With the retaliation against ISIS in Syria, you're getting a little bit of a bounce in oil. So we'll see what happens with the oil sector today. The USO, which got hit real hard. We've been showing you the chart of the USO for a while now because the market liked when it was in this channel. Okay, but then when it broke below this support, okay, down here, market started to notice and say, what if oil goes below 40? So it did put a minor low in on Friday, and now I guess it's going to bounce up with some emotion because we're bombing some oil fields, etc. So here's like 1370-ish. If it gets up here and gets rejected there, maybe you short oil there for a move back lower. If it reclaims it and gets back in this area, maybe that's helpful for the overall tape. The XLE put in a quick little double bottom. I don't know if it holds, but for a trade, perhaps. That was the low right here. And now if you look at the low from Friday, that's your spot. If it were to take out Friday's high and show some strength, that's 66.58. And then, maybe there's a trade up to these moving averages. But then again, there's a lot of resistance right there. So it is a broken sector. It's still below the 200-day. Look how battered and bruised it's been. For a lot of us, we didn't take any of this pain. This is, again, I like to show this as a lesson because look at how this trend broke. Okay, here was your momentum trend that broke up here, and then this is when it lost a 200-day around 90, and it's been below it ever since. So oil and most commodities have been in a downtrend for over a year and change. Okay, so if you're out of the way, you could trade little double bottoms like this, for a quick move up and be tactical. But if you sit in things and hold your nose and go underwater, you can stay underwater and drown, especially if you run out of money solvency-wise. But anyway. So this is what the XLE looks like, and you'll see if there is some kind of bounce back up to here, and then some might even try and short it. We'll see what happens. Gold's really not getting much of a bid. The GLDs, your flight to quality trade, I don't think that's going to last too long, to be honest. You did get tried right there inside day. I guess it's opening above this. It could fill this gap. This gap gets filled up to about 105.50. And then if it really had a big bounce in gold, that could take it to almost 107. But I think if you're long it, you sell into this, and if you're looking to fade it, I would think you'd be a seller into this versus a buyer. But we'll see what happens there. The banks were really no help later in the week. They had that big exciting move on the hot jobs number, and then within a day they filled all those gaps, showing you more of that as being an exhaustion gap versus a power gap. We talk about how to interpret that. Here's the you can't really see with the XLF. We'll do it with Goldman Sachs. Goldman Sachs had the gap up, okay, and it looked as if it, just like earnings, were to hold the gap, you'd have some strength, and then as soon as it came in, it lost momentum there. Okay, so now at this point, I guess, look at Friday's low to 190.06. That's your pivot to see if it could try and hold and stay around, but doesn't look so compelling. JP Morgan the day after the gap actually filled it, or a portion of it, showing you that it could be suspect. Okay, this was that gap up after the jobs and already went in it. Tried to reverse lower high and then boom. So now I guess we'll see, if it could hold this spot here. JP Morgan right down 65.23. In the Chinese stocks, Baidu's trying to hold up, but I don't know if that can continue. The Shanghai has been a little stronger. This still is, holding around the 8-day. I think there was a positive article in Barron's. We'll see how it affects it, but only stay in this name if it holds above 189.55. If it breaks this, some guys might try and short it, and you might maybe see more downside. It's had a huge move. Last time I put it on the note when I said it was starting to look better, it was all the way down here. Some of you guys caught a nice swing trade and some didn't. But anyway, this is where it is now. BABA also has been under pressure ever since Chano said it's a big short of his right there. It's been working its way to the downside. At this point, I think, it's probably the short. I wouldn't be shorting it now. This was, when he said it, this is when it lost a 200-day or the singles day below 80, and now kind of in no man's land. But I would think at this spot here, maybe going sideways, it's a better, buy than sell, just even for a scalp. And that spot right there is around 73.64. So, I was hoping to get a down open to maybe look to buy it into this as, from here to here as a decent size retracement. So, as I go through all these charts, I see some things, broke their accelerated trends. They're not broken as far as like they can never rally again. We've seen this before. When they come after them, they can do a big gap up and trade versus and repair. If we go back to the 2011 playbook, the playbook was, big rally in October, and then November pulled in, and then the end of mid-November went like 7.5% off the highs. We pulled back to the 61% retracement. Right now, if you look at this at the SPX, you'll see that at this point, you get the Fibonacci's, which are right here, I believe, from this double bottom low all the way up to here. We just saw, let's see, what retracement was this? We just saw the 0.382% retracement, and if you follow Cooper, he had a little 60-minute head and shoulders top, which met the measured move. So we'll see what type of bounce we get here. Maybe back up to 257-ish. But if this doesn't hold in the next session or so, I remember in that November went all the way down to the 0.682% retracement, and knocked the teeth out of longs because it was such a grindy, horrendous move lower. Then within like 3-4 days, it snapped right back. And according to JP Morgan Institutional, they also think that we could close flat on year. So between now and then, it could be a very pick your spot type of trade. Make sure you're patient because, again, if we open lower, perhaps it would have been a better trade. But opening right around here, it could be choppy before it tries to, pick a direction. So I do come in flat today. I'm going to see if high beta tech gets sold to play more downside catch up. I'm going to be probably trading Facebook more than trading Amazon and Google, but I'll be watching to see if they hold up and try and bounce to do the H sell setup or just creator through Friday's lows. I'll see what happens with Apple. That's been pushed apart, and it's already in the 111s this morning, not even bouncing with the futures. So we'll see if any stability comes in there. And oil that's bouncing on the emotions of bombing Syria. We'll see if where that bounce goes to, and if that bounce lasts for a few days, that could take some pressure off the market too. So we're entering a new week where some of the fluff of that 5-6 week crazy move that punished every short for being early and made everyone feel stupid who sold their longs early. Some of that fluff is out, but now the question is, in this range, was Friday's low enough? And if it was, where do we rally to? And we have to just, roll with the punches and figure it all out as it's a new week and earnings are behind us. So it's probably going to be a lot of headline-driven macro. What's the Fed going to do with now this new volatility in Paris? Are we going to hear on the loudspeaker there's a box in Times Square and the market's going to sell off because they think it's a bomb, and it might not be? So we're probably in that weak environment where there's going to be headlines and rumors and things galore. So you want to listen up and you want to know your level. So if there's an overreaction to something that winds up being nothing, you're not taken out of your positions, or maybe even you get an opportunity to position in one of those type of scenarios. So follow us on the radio, follow us in the chat. I have a big webinar I'm doing on Tuesday about the Redler All Access product. Hopefully you'll tune in and I'll show you what I do each morning and how I put together my game plan and how I help you with yours. And we'll get more into that at another time. I'll see you at the recap. Have a good day trading.